Advisory services offered through VestGen Advisors, LLC, an SEC-registered investment advisor. Securities offered through Private Client Services, LLC, member FINRA and SIPC. Private Client Services and VestGen Advisors, LLC are unaffiliated entities. Any information discussed does not constitute investment advice. VestGen Advisors and Private Client Services do not offer tax or legal advice. People of Chicago, welcome to In the Know Radio with Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. You want help from someone that you can trust, someone who knows what it takes to get retired and stay retired. Today, Craig's going to teach you what you need to know. So get ready to learn something that could change your life. Get connected to the show by calling 833-964-PLAN or go to GetRetiredStayRetired.com. And now, here's Craig Bolanos.
833-964-PLAN, 833-964-PLAN. That's the number. We bring you sincere and actionable ideas every week that you can use to improve the lives of yourself and your loved ones financially. You don't want to survive retirement. You want to thrive in retirement. And that's going to take a plan. It's going to take strategy. It's going to take things that are TNT, tested in the trenches. But I would be remiss if we didn't jump into, hey, what in the world is going on? Because obviously, the tail end of this week, not a great week for the average 401k investor. So let's break down myth versus reality. Let's talk a little bit about what happened. I think you already know by now, but more importantly, let's talk about the strategies we've been discussing for weeks, not in anticipation of the sell-off, but as a hedge of the possibility of the sell-off that could have benefited you. And it's not too late. There's still room to participate. So after much anticipation, the Band-Aid was finally ripped off. Yep, the Band-Aid came off Wednesday evening in that press conference from the Rose Garden. And for anybody who was hoping it was going to be relatively painless, turned out not to be the case. So here's all that happened. Number one, you already know it by now. The average U.S. tariff rate, well, it came in well above expectations. As trade policies currently stand, and assuming no negotiations on the so-called reciprocal tariffs, the weighted average tariff in the U.S., what was around 2% worth in 2024, could be as high as 20% or more. What does it mean? Unless something changes, things are probably going to cost more money in the near term. But I think you knew that. Part number two, higher tariffs. Well, the market view, that's the only view that matters, is it's going to complicate growth, and it kind of complicates the inflation backdrop. I mean, there's no doubt about it. You know, the simple answer is if things stay in their current state, people need to expect lower growth, and people should rightly price in some lower earnings estimates. And there's probably some upside risk to the inflation numbers near term. But everyone needs to remember that this is near term, short term. This is not long term. We're talking days, weeks, months, up to a year. Third, things you need to know. Our partners to the north, our partners to the south, Canada and Mexico, got to be honest, they were relative winners in what was released this week. Yes, they actually were relative winners. But you know who drew the short straw? China drew the short straw. And you know what? Good for them. China's been ripping us off forever. I have no love for China. They don't love me. So I don't mind seeing it. But the reason I said that Canada and Mexico were relative winners on trade this week is because, sure, they're now subject to the 10% tariff that went into effect on April 5th, but there was no escalation. No escalation. And inside the USMCA, the US-Mexico-Canada agreement, most of the stuff is largely untouched. So is there a silver lining, though, to this tariff playbook? Well, first, Liberation Day, it's now behind us. And the narrative should end up shifting from the tariff policy to tariff negotiation. And the administration, they've already stated that the tariff amounts mark the high watermark. I repeat, they mark the high watermark for rates, barring any retaliation. Second, the market now has details on what's likely the worst case scenario for trade policy. That's where we're at right now. And that means we could be at a peak of policy uncertainty. And you need to have a peak in policy uncertainty in order to start moving towards policy clarity, in order for investors all around the globe and in the United States to reassess the landscape to get involved yet again. So what's the bottom line here? This week, terribly volatile. I would argue everything since the 19th of February, very volatile. But is it a bearish game changer? No, it's not yet a bearish game changer. And I just want to mention a couple of reasons. Again, I say this to people. The unemployment rate remains very low, very low. Consumers have been complaining about the state of the world in 23, complaining about the state of the world in 24. They'll continue to claim about the cost of things in 25, but you might find that that high-end consumer is able to make up for the lack of spending for everybody else that can't. Number three, no one said that we were going to eliminate earnings per share growth. We just said we were going to reprice earnings per share growth from what I called low double digits to 7-ish% for the S&P. Well, if stock prices tend to follow earnings per share growth, that means, believe it or not, there could still be some gains. Next thing on my list, we still got 75% of the year left. 75% of the year is left. So let's let the process play itself out. I say that again, let the process play itself out. And if there's a takeaway, it just bears being repeated. The administration, I'm not defending, but the administration implied that these tariffs are a ceiling. The administration said they're open to negotiation for global tariff reduction. And if so, it remains a possibility, a strong possibility, that in the coming months, that global tariffs get reduced. Second, very important, exemptions, including all US, Mexico, Canada compliant goods. Exemptions for chips from Taiwan. Exemptions for drugs, that's pharmaceuticals from Europe. Those are major, important categories that should help soften the blow from the tariffs that are instituted. All right, so that's where we're at. But what do you do about it? Well, remember our thematic for 2025. Our thematic was pragmatic optimism. I put those two words together on purpose, pragmatic optimism. And pragmatic optimism meant also having a commitment to implement that pragmatic optimism by diversifying our diversifiers. And the first diversifier of our diversifiers was a geography lesson, reminding everybody that money can't just be in the S&P 500. And that's why we were shouting at the rafters that coming into 2025, in the same way we exited 2024, it was going to be incumbent upon everyone to slowly start moving off of that gigantic overweight to US markets and getting some money into EFI, Europe and Far East, and EM, emerging markets. Because I got news. Europe and emerging market stocks are up for the year if you're a US investor. Yep, even with all the carnage, European securities and emerging markets are up for the year. So having a dose, an allocation to foreign stocks coming into the year has been a good hedge. Number two on my list of diversifying our diversifiers was to make sure that people had adequate amounts, if they're already retired, in their CFR, cash flow reserve accounts. So that meant taking stock market profits from 2023, stock market profits from 2024, if people are already retired, and ensuring that there's adequate amounts in their cash flow reserve accounts so no one would be required to sell stock in case prices went down. That's basic table stakes for a good financial planner, a great wealth manager, but it's a reminder to everybody who's listening that if you don't have that safety valve, you don't have those short-term fixed income, you don't have those bonds in your account, you don't have a cash flow reserve account, well, you should have, you still can. Let's find the way to get there together. 833 833-964-PLAN. That's 833-964-PLAN. Or go out to the website, getretiredstayretired.com. That's getretiredstayretired.com. Third thing we've been talking about, how do you implement pragmatic optimism, aka diversifying our diversifiers? By starting to place money into not just public markets, but into private markets and using some of those asset classes such as private credit, private credit, private credit, because we want to reduce our equity risk premium while generating income and really focusing on credit to drive yields of 7 to 9%, 7 to 9%. Next piece, we talked about diversifying our diversifiers further, and that's why we talked about infrastructure, talked about industrial warehousing, because both of those are trends that are being uninterrupted. Both of those are trends that are being uninterrupted. Again, data centers are the new gold. Power generation is a must when it comes to security, both here and abroad. That's infrastructure. Pricing power. Pricing power really lays with those companies who are doing omni-channel. That's a retail footprint with a strong online presence, all supported by what? Industrial warehousing, big concrete bunkers to store all the goods that move by truck from your app on your iPhone down to your door. Because I know you get a lot of cardboard boxes because I got a Ring doorbell like everybody else. You're just like me. We're going to talk about how to participate in those things when we come back, but we're going to do a commercial break. In the interim, 833-964-PLAN. GetRetiredStayRetired.com. GetRetiredStayRetired.com. You're listening to Craig Bolanos in the Know, AM 560, The Answer.
More In the Know Radio with Craig Bolanos on AM 560, The Answer, where his goal is to pummel you with financial know-how until you say uncle.
I want to pummel you with that information because I want you to get retired and stay retired. Now, speaking of getting retired and staying retired, we've got some fantastic resources that I want you to connect with on our website. So when you go out to our website, getretiredstayretired.com, you're going to find some fantastic downloadable publications, including our most recent publication called Trade War 2.0, Trade War 2.0. So I want you to unpack the escalating trade tensions of 2025 with our Trade War 2.0 briefing. It's going to give you a clear lens on tariffs, geopolitical shifts, and their effects on global markets so you can be informed and educated and have some ideas. And after you download that publication, if you want to have a conversation about how it connects you with your personal funds, 833-964-PLAN. Go to our website now, GetRetiredStayRetired.com, GetRetiredStayRetired.com. Download for free our Trade War 2.0. That's our Trade War 2.0 publication. Now, in that last segment, we talked about the fact that we were planning for pragmatic optimism, which is still growth, but slower growth in 2025. And that's the reason we encourage clients to be mindful about how they diversified their diversifiers. And I said we'd start breaking those down further, so let's do it now. So the first idea to diversify the diversifier was, again, geography. And it's been wildly uncomfortable to invest abroad and have equity exposure in Europe or emerging markets for years. Why? Because if you did it, it put you in the diversification penalty box. Why? Because U.S. stock markets have outperformed foreign stocks going all the way back to the spring of 2010. But what we started talking about going into the end of 2024, and we've continued to discuss on this radio program since 2025, is our suspicion that because foreign stocks were so cheap relative to the U.S., for all you technicians out there, foreign stocks are 3 standard deviations from the norm, meaning unusually cheap, that it might make sense to start getting some allocations abroad. And if you're going to do that, then you need to make sure you understand what's the best way to do it. Do you do it with a ETF? Do you do it with a fund? Do you do it with a separately managed account? Do you hedge out the currency risk, or do you go naked, unhedged? And specifically, do you focus on a broad basket, or do you focus on consumer staple or consumer discretionary? Those are all the things we want to help you with, because you can't just have IQ, intelligent quotient, which is let's get some foreign equity into our portfolio. You have to have great implementation quotient. That's a different form of IQ. And especially when you're doing international investing, whether it's small, medium, or large, you need to make sure you understand currency, what I call Forex, in order to make a good decision. 833-964-PLAN. Go out to our website, getretiredstayretired.com. Download that Trade War 2.0 publication today. Next piece. We talked about making sure we're going to be focused more on income. And the reason we wanted to be focused more on income is after 2 back-to-back years of great double-digit returns in equities, it just made some sense under the guise of pragmatic optimism that we'd have a slowdown in the rate of return of equities in 2025. And that is the reason we want people, if they haven't had the chance to be educated about the world of credit, specifically private credit, to really consider it, because it's a unique asset class, an alternative asset class that is not for everybody, but it's for the right investors who understand a small portion of their money being allocated into a space that's primarily first lien positions, floating rate securities, lent out to corporations, and it's a great way to generate income with the potential for income in that 7 to 9% rate of return. 833-964-PLAN, 833-964-PLAN, getretiredstayretired.com. Next thing, again, I mentioned was real estate. Not buying a real estate mutual fund, not buying a real estate ETF, but consider participation for those who qualify and those who value passive income, getting monies out of publicly traded stock markets and getting into private markets that aren't subject to the big premium and discount that happens on a daily basis for publicly traded securities. And if our theme of this year was diversifying the diversifiers, then the easiest spot to go in real estate for us isn't to do something that is speculative, but let's do something that is tested in the trenches. Let's do secured investing real estate to where the puck is going to go. As Wayne Gretzky always said, you don't skate to where the puck is, you skate to where the puck is going to be. And I think that's going to be a continuation of online digital retail delivered straight to the doorstep. It's not just an age wave demographic thing. It's an everything thing. It's happening. I mean, for crying out loud, people are even getting prescription drugs dropped to their doorstep from companies like Amazon these days. Industrial warehousing supports that theme. Next, infrastructure. There's no denying that there's going to be an energy renaissance in the United States. I would argue there's no denying that there needs to be a revolution in energy abroad, because there are so many countries in the European Union and other places who are not energy dependent, who now see that as a security risk, who are going to want to find ways to harness, protect, generate, and distribution energy. And you're going to see a lot more public-private partnerships, that's public tax dollars partnering with private companies to build this out both in green and brown space. Green means the investment of energy doesn't yet exist. It's got to be built, whether it's a liquefied natural gas terminal, whatever it might be. Brown means it already exists, but it can be expanded to run more efficiently. And for those who qualify and want to learn more, participating in infrastructure in both green and brown makes a lot of sense to partner with a firm that has a history in doing such. Next piece, your fixed income. Bonds are still for ballast. What is one of the reasons that I have hope? We're in a difficult moment, everybody. Trade has fully embraced fear into this marketplace. The possibility of a recession has increased. It's still not a probability yet, though. It's just possible. But credit spreads, meaning the yield difference between a like-minded quality bond and a high-yield bond, they haven't blown out yet. And I've learned over the past 30 years that the bond market is typically the smart money. And with credit spreads having not blown out, I think it's a reminder to anyone who's listening that with high starting bond yields, because of elevated interest rates today, an investor can get very generous coupons, and those coupons act as protection. I think the total return a fixed income investor, a bond investor can obtain going forward is some of the best that we've had in more than a decade. And if you're not really paying attention to the type of bonds in your portfolio, meaning the structure, do you own individual bonds? Do you own ETFs? Do you own separately managed accounts? Do you have defined maturity, meaning you know exactly when your bonds are going to mature? You know exactly when you're getting your money back. You know exactly what your interest is going to be, your yield to maturity. If you don't know those things, you can and you should. Because bonds, you can't just buy the bond index. There's 16 different categories of bonds. You deserve to be in the right kind based on your tax return, based on your risk budget, based on your income needs. That's pillar number 2 when it comes to getting retired and staying retired, generating sufficient income. So if you want to learn more, you can, you should. Connect with us at getretiredstayretired.com. That's getretiredstayretired.com. When you're there, poke around. Look at our thought leadership. Look at all of my television and media appearances so you can see me in a different perspective than just the platform of radio. Download our publication, Trade War 2.0, because I want to make sure you have a clear lens on tariffs, the geopolitical shifts that have led to the tariffs, and their potential effect on global markets. And then when you're ready, take advantage of a complimentary consultation. And when you contact us from this radio station, I will make sure that I visit with you myself. Absolutely. 833-964-PLAN. GetRetiredStayRetired.com. You're listening to In the Know with Craig Bolanos, VestGen Wealth Partners on AM 560, The Answer.
More In the Know radio? You can't handle more In the Know radio. Okay, yeah, you can. And it's on AM 560, The Answer. Welcome back. Here's more with Craig.
So we've been talking about this theme of pragmatic optimism and diversifying your diversifiers the entirety of the year. But what I think is so mission critical that we got to come back to is, what do you need to be doing right now if you want to worry less, live more, and enjoy the fruits of your labor? Well, it's about being proactive. And proactive means having a plan that leads to a process that's backed by people, that creates perspective to give you the probability of results that you need to get retired and stay retired. If I ever come across sounding smooth and calm, it's because when I leave the office every day, when the entire team leaves the office, I know that those people who are on the cusp of or already retired are going to be fine because of the words I just shared with you. It's a proactive solution that originates from a plan that is process driven, implemented by a team of professionals that allows people to have the probability of success, which gives you perspective. Because isn't that what you want? You want to worry less, live more. Those are the keys to enjoying life. And what I tell everybody is, we got this. On behalf of our clients, we got this. On behalf of those of you who wonder, maybe you're a prospective future client, we can have this for you too. And if that's what you want, I think it's what everyone deserves. 833-964-PLAN. That's 833-964-PLAN. Connect with us at getretiredstayretired.com. That's getretiredstayretired.com. When you're there, download our Trade War 2.0 publication. Download our Trade War 2.0 publication today from getretiredstayretired.com. Now, I need to make sure people understand that there is a chance that there's still a bullish case for stocks this year. Oh, I'm going to make it right now. I'm going to make the bullish case for stocks right now. I'm also going to make the bearish case. The bullish case is that this isn't a total washout. It's not a total washout. The market isn't as bad as the index performance implies. It hasn't been a total wipeout for the market. I mean, much of Thursday, much of Friday's declines, they were declines again in technology, in communication, in consumer discretionary names. So here's the point. While tech, communication, consumer stocks got crushed, there are parts of this market that have held up. But there's sectors in this market that are still positive for the year. So if you followed our concept of diversifying the diversifiers, not just geography, not just alternative investments, not just various forms like private credit, real estate, et cetera, but you moved into those areas that have been unloved. I mentioned before, healthcare, energy, et cetera. You have a very different experience. And everyone needs to remember the Trump put still exists. Let me put this in air quotes. The Trump put still exists. The current market calamity, and I'm calling it that because of Thursday and Friday, the current market calamity is very different from the two recent events. Everyone remembers the pandemic, and most people certainly remember the financial crisis, in that the current calamity is manufactured by policy. And President Trump initiated these tariffs with the stroke of a pen. He can reverse them, modify them, re-implement them with the same stroke of a pen. And to that point, the Trump put still exists. It absolutely still exists. And did anybody see the jobs growth? We got the data. The March non-farm payrolls came in way above expectations. You know what that means? We're still creating jobs in America. So at least for now, we have to understand that these tariffs that came in from the Rose Garden, they're the worst case tariff scenario. It's a ceiling on what the U.S. is going to do. And if we can limit through proper trade, through proper negotiation, the escalation, China had shots fired overnight between Thursday and Friday, we're going to be okay. Now, there's another side to the trade. You're hearing it all over the news. People are talking about welcome to the 1970s. Yeah, that's what people are talking about. They're saying welcome to the 1970s, that the tariff declaration is going to bring back memories of President Nixon's, shock. Those were the price controls for anyone who remembers that. I mean, that went down in history as a colossal policy mistake for Nixon because it eventually gave way to stagflation. You're going to hear everyone say that the market's still way overvalued. Well, we've been saying you need to be invested in more than just the S&P 500 because, yes, there are components of the S&P 500 were overvalued, okay? So the bottom line here, though, is this. You may get as many as 5 interest rate cuts now this year. Yeah, you might. You got oil prices having come down. Interest rates are going to come down. You can reverse a lot of the damage that's been done through negotiation, what I call the art of the deal. So hope is not lost. But if you want to be sleeping at night better, you need to work with a firm that's going to be proactive because you have a plan that's backed by a systematic, repeatable process that's tested in the trenches, that's overseen by people, multidisciplined specialists, that's going to increase the probability of success, which gives you, again, the perspective to worry less, live more, and enjoy the lifestyle you've been working for in retirement. That's why I joke all the time, but it's not a joke. When I say you don't want to survive retirement, you want to thrive for retirement. Yeah, that's exactly what we're talking about. So how do you connect with us? 833-964-PLAN. That's 833-964-PLAN. That's the phone number. Go to our website, getretiredstayretired.com, getretiredstayretired.com. Unpack that trade war 2.0. Now, what should you be doing? Let me tell you exactly what we're doing as we speak. Part number one, if you've got names in your portfolio like we do that have actually rallied year to date, yes, there are stocks that are up year to date. We own a number of those stocks. Guess what you can be doing right now? You can be looking to sell those stocks that have rallied to buy some of the stocks that are literally down 40 to 50% off their highs. Some of those technology and communication names that you wish you were in, you can get them in at bargain basement prices. It just makes some sense. Part number two, what can you do? You can do additional sector rotation to get more into the concept of an equal weight, which is where we've been and where we've been favoring. That's the reason we had an underweight relative to the benchmark going into the year for areas like technology and communication stocks, with an overweight in places like financials and healthcare. Number three, you can upgrade your bond portfolio, upgrade your fixed income. Start focusing on clipping those coupons. You just heard me say that we always planned on getting a minimum of 2 interest rate cuts this year. Now we could have as many as 4 to 5 interest rate cuts. That means it's last call to lock in coupons. And above all else, maybe I'll give you a way to lock in some coupons where you can get yields today for safety if you're worried or you need cash flow, where you can lock into some very nice, safe and comfortable 5% APRs to get you through to whatever other side we might be heading towards. 833-964-PLAN. GetRetiredStayRetired.com. I'm Craig Bolanos, in the know with VestGen Wealth Partners. We're here to help reinstill faith and confidence in everybody that knows what it means to want a plan backed by a process with great people that leads to the probability of success, which gives you the perspective to live more, worry less, because we got this for you. We'll be back after this break.
Would you like a dose of knowledge? Good, because Craig is back and about to fill your retirement prescription. Back to In the Know Radio on AM 560. The Answer.
So I share this with everybody as we come into this new world. It's a world that's wide and varied. The global macroeconomic backdrop has changed, and it's changed quickly with the announcements that came out of the Rose Garden this past week, because the trade war 2.0 is definitively here. Download your guide now. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. But because our program is all about sincere and actionable ideas, here's a very sincere and actionable idea. Interest rates are heading lower. And if you want to lock in yields now, there's various ways to do that. We can build and curate a bond portfolio. And by building out a bond portfolio, we'll have a yield to maturity. We can achieve a well-diversified bond portfolio of various forms of credits. Those are taxable bonds, and still achieve yields in the 5.1 to 5.35 range. That's not bad, because if you're taking a 3 to 4% distribution per year, but you're generating 5.1 to 5.3% in your bonds, that means you're not going to be touching your principal. You're going to be living off the interest. You can do that with bonds. For those who don't necessarily understand the eloquent simplicity, but also some of the complexity of building a bond ladder, a bond bullet strategy, there's something else that people can do. You can take some of your money before rates go lower and simply look to invest in a very simple, straightforward, multi-year guaranteed annuity. I didn't say a variable annuity. I didn't say an equity-linked annuity. I didn't say a fixed index annuity. I just said a very simple, straightforward, multi-year guaranteed annuity. That's nothing more than an alternative to a CD. It's a tax-deferred annuity. You put your money in today. You hold the annuity for 3 calendar years. Your principal is protected. You earn a fixed rate of return. And what does it look like today? There's a whole myriad of multi-year guaranteed annuities today with 3-year maturities, with yields ranging between 5 and 5.35%. If that's something you want to learn more about because you just want some Tylenol, you want to take the edge off, or maybe you want to just live off the interest income from the annuity at a 5 to 5.35% APR, give us a call. 833-964-PLAN. That's 833-964-PLAN. Go to our website, getretiredstayretired.com. So I mentioned adding to fixed income, adding to bonds. I mentioned using a ladder or a bullet strategy to deploy those bonds. Just know there's 16 sectors of the fixed income market, the bond market that is. Not all sectors are created equal. So you need to work with a firm that has relationships with multiple trade desks and institutions to help ensure that you get best pricing and the efficacy of the coupons that your family deserves. That's what we do at VestGen Wealth Partners. For those that are looking for a simple turnkey alternative to take some of the risk off, nothing wrong. If you can be in a position where you can out-earn inflation consistently, maybe do like a simple 3-year, multi-year guaranteed annuity, again, with rates of 5 to 5.3% and change. That's not a bad thing. Just earn a guaranteed 5% plus each year for the next 3 years. But where that has to fit in is it needs to fit into your financial plan. That's not supposed to be for all of the money. That's to be in the safe money. That's the money that you're going to consume over the next 1, 2, 3, 4, no more than 5 years. Because the real secret to wealth building is CAGR, your compound annual growth rate. And the best way to achieve a good compound annual growth rate is to invest in those great companies of America. Companies who in today's market have pricing power, That's a key differentiator inside of a market that's going through a global macro trade issue right now. Investing in companies that have rising dividends, because those rising dividends are backed by what? Free cash flow. You can't fake cash flow. Investing in a company that generates great, systematic, repeatable cash flow is the hallmark of a durable, quality portfolio, because a big part of retirement is just having that process. And again, we call it the 3 pillars of retirement income. And pillar number one is capital matters, capital matters, capital matters. At this stage in life, you might not be able to take a gigantic hit. Everybody enjoys the run-up in technology. Everyone enjoys the run-up in their growth mutual funds. But when parts of those sectors fall out of bed 35 to 40%, You can't afford to have that be the majority of your portfolio, because then you're giving back 35 to 40% of anything you've ever made since the history of time. That's why a globally diversified, multi-asset class portfolio is the way to go. But you can't just have a account. You got to have multiple accounts where each account has its own purpose based on when it's going to be consumed, how it's taxed upon withdrawal, how it's inherited, how it transitions from one spouse to the next, etc. That's a big part of the process. Pillar number 2, you need to generate sufficient portfolio income. That's interest payments, dividend payments, annuity streams, whatever they might be, to cover the spend. Because if you're generating sufficient portfolio income, you're never going to be in a position if you have to sell stocks when they're temporarily down. January was a great month. The first 19 days of February was good, but it's gotten rocky since then because of the policies that are going back and forth across the globe. Put yourself in a position to win by focusing on the generation of income. But don't lose sight of the fact. Do not lose sight of the fact that Thursday probably felt a bit like 2020. Friday probably felt like 2020. Remember, we had those 3 days in March of 2020 where the stock market literally fell 6 to 7% per day. The stock market during the initial form of the pandemic fell 36% in 16 trading days. I'm not saying that's what the market's doing here, but it feels a lot like that. But remember what came out of it. Remember the puts. We had a Fed put. We had a fiscal put. Some of those same things are here. We can learn from what's occurred. And if that's the case, that means parts of your portfolio are going to be staying invested, but you need to be reconfiguring those investments right now to take advantage of the future growth that's eventually going to come inside of America, because America is going to keep growing. You don't think it is? Explain to me how in the world we just created 228,000 jobs in the month of March when analysts thought we'd only create 140,000. Yeah, we just saw wages, the average hourly wage, go up again. That's 3.8% now year over year. So job growth leads to wage growth, leads to consumer spending. There's fundamentals that are still in place. And you need to make sure that parts of your money are growing so you can grow your capital base over time to further grow your income over time so that you can worry less, live more, and enjoy the lifestyle you've worked your entire career for. Connect with us online. GetRetiredStayRetired.com. That's GetRetiredStayRetired.com. Our phone number, 833-964-PLAN. 833-964-PLAN. When you're on that website, download our publication, Trade War 2.0, and connect. We've made room for people from this station who need a consultation in today's environment. 833-964-PLAN. GetRetiredStayRetired.com. You're listening to In the Know with Craig Bolanos, VestGen Wealth Partners on AM 560, The Answer.
Windy City, get ready to be blown away with a hefty gust of financial know-how. You're listening to In the Know Radio with Craig Bolanos on AM 560, The Answer.
So here's your strategy of exactly what you're going to do now. If you already work with a firm that has a deep planning commitment, backed by a robust process that's tested in the trenches, supported by a diverse team of professionals that have a multidisciplinary background that give you the probability of success, which allows you the perspective to worry less and live more. That's what we do at our firm. You're already in good shape. But what if you're elsewhere? What if you have no plan? What if you just have a pie chart of some investments and you're just told, hey, don't worry, be happy, all's going to be good? Well, you need to remember something. If you take care of the downside, the upside always takes care of itself. Let me say that again. If you take care of the downside, the upside always takes care of itself. So I ask everybody coming into this weekend, right? I mean, it's Sunday. So we come into this incoming week. What do you want your portfolio to look like when you grow up? Yeah, ask yourself that. What do you want your portfolio to look like when you grow up? And then let's take some positive steps as this market retraces and bounces to get there, because you don't know how it's going to play out. You don't. I think this too is going to be good. Remember, there's the art of the deal. Let the process play out. The process hasn't been going on that long. But if you want to stay retired, not just get retired, but stay retired, you need to make sure you have a process to manage the downside. And that means if you have no alternative investments, no cash flow reserve accounts, no hedged equity, no risk off positions anywhere, you better develop some. You better, just in case. So 833-964-PLAN. 833-964-PLAN. Go to our website, getretiredstayretired.com, because you need to know, just as we did, hey, when the S&P went through 5,250, which it did on Friday, that triggered these specific investments for clients in certain models we run. When this happens, it triggers this. When the market bounces back up, it triggers this. That's what you need. That is a plan. That is the confidence. That is the co-pilot of a great advisor working under a strict fiduciary standard. That is us. I'm Craig Bolanos. We want to help you get retired and stay retired. I want to help you not just survive retirement. I want to help you thrive in retirement. We want to be a beacon of hope and inspiration, that there is a way to get through this. We'll get through this together in a collaborative relationship that gets you to your goals. GetRetiredStayRetired.com. God bless this great country, the United States of America.